Hello and welcome to the channel. In today's video, we are going to talk about something that could seriously change the way you approach forex trading, and that is the best times to trade forex if you are based in Nigeria. We will also take a look at the times you should stay away from the markets, especially if you want to avoid unnecessary losses. A lot of traders don't struggle because their strategy is wrong, they struggle because they are trading at the wrong time of the day. Timing matters more than most people realize it, and it is one of the most ignored parts of trading, especially by beginners. So if you're a Nigerian trader and you want to understand how to trade with better timing, make sure you watch this video to the end and you might discover what has been holding your trading back. Now let us begin by looking at how time in the forex market actually works. The market is open 24 hours a day, 5 days a week, but that does not mean that every hour is worth trading. Some parts of the day are full of opportunity with higher volatility and liquidity, while others are slow, unpredictable, or downright dangerous. As someone trading from Nigeria, you need to know when each major session opens and closes in West African time, which is the time zone used across the country. Forex market is divided into 4 major trading sessions. We have the Sydney session, the Tokyo session, the London session, and the New York session. If you are using TradingView or any similar platform, make sure your time zone is set to Lagos so that you are seeing the accurate local times. You can also use a session indicator. Just type sessions in the indicator search box and choose one that works for your style. For this video, I will be using the trading sessions indicator by TradingView. Now let us look at what these sessions look like in Nigerian time. The Sydney session starts at 10 p.m. and ends around 6 a.m. The Tokyo session begins at 1 a.m. and goes up till 10 a.m. Then the London session opens at 9 a.m. and ends at 6 p.m. And then finally we have the New York session that runs from 1 p.m. to 10 p.m. Nigerian time. So yes, the market is technically available all day and most of the night, but that does not mean that you should be trading every single hour. So now that we know the major forex sessions, let us focus on when the best trading opportunities actually show up. So one of the most powerful periods is the time when the London and New York sessions overlap. In Nigeria, this overlap happens between 1 p.m. and 6 p.m. This is when the market is most active, mainly because both the London and New York markets, which are the two biggest financial centers, are open at the same time. There is more liquidity, more volatility, and usually tighter spreads at this time. So if you are trading pairs like the Euro USD, the British Pound USD, or the USD Japanese Yen, you will likely see fast, decisive price actions during this window. Then this time of the market is perfect for you if you are a scalper looking for quick moves, or if you are a day trader looking for strong trends to ride on. And for most Nigerian traders, this time fits well into the day. You can do all your trading during the day before evening and not have to stay up late. Even if you have a regular job, you would still be able to find time to monitor your positions during the day. Now, if you prefer to trade earlier, the London session on its own from 9 a.m. to 1 p.m. is also a good option. This time period is especially useful for those who have flexible schedules or those who trade full-time. A lot of important European news is released during these hours, and pairs like the Euro British Pound and the British Pound USD tend to make clean directional moves. So if your trading style is structured and you like to be done before late afternoon to evening, this session works really well for you. It also suits traders who are more focused and alert in the morning or early afternoons. So now let's talk about the New York session, especially the second half that runs from 6 p.m. to 10 p.m. So while the London session is already closed by this point, the New York market is still active, especially for USD related pairs. So if you are busy during the day, maybe with your 9 to 5 or with other engagements that would make you miss the London-New York overlap, and you only have time to trade in the evening, this session might be a better fit for you. So you just need to put it at the back of your mind that this session goes late into the night. So if you are trading during this time, be careful not to let it mess with your sleep or with your daily routine. Some swing traders like to enter trades towards the end of this session, around 8 p.m., when the market begins to slow down and the price becomes more stable. This can be a good time to enter with less noise if you plan to hold positions for several days. Next up, we have the Asian session, which comprises of both the Sydney and Tokyo sessions. And this session runs from 10 p.m. at night till 10 a.m. the next morning in Nigeria. This is generally a slower part of the day because volatility is low, spreads are often wider, and price action tends to move sideways. But that does not mean that this time or session is useless. It is actually the best time for you if you are a range trader and you are looking to buy low and sell high within a tight zone. It is also ideal for trading pairs like the USD Japanese yen, the Australian dollar USD, and the New Zealand dollar USD. Then, if you are naturally a night owl or you are up early, the Asian session might align with your routine. Just do not expect sharp moves, especially if you are trading pairs like British Pound USD or Euro USD during this time. This session might not exactly be conducive for trading due to the fact that it falls into the late hours of the day and also the early hours of the day. Because if you have gone about your daily activities, it would be quite uncomfortable to stay up late to trade, especially during the Sydney-Tokyo overlap. But if you are a full-time trader and it is something you can do, then by all means, go for it. But before we move on, there is something very important you must understand, and that is the daylight savings time. Both the UK and the US adjust their clocks twice a year, and when they do, the opening and closing times of their trading sessions shift by 1 hour. For example, when the UK switches to British summer time, the London session opens at 8 a.m. Nigerian time instead of 9 a.m. Similarly, when the US moves to daylight savings time, the New York session begins at 1 p.m. instead of 2 p.m. If you are not aware of these changes, you could miss key trades or enter the market too early or too late. These changes usually happen in March and November, so always double check the session time during those months and adjust your trading schedule accordingly. Now let's talk about another very important part of trading, which is economic news release. These reports are some of the biggest triggers of price movements. One report can send a pair soaring high or crashing down in seconds. So as a trader, you must know when important data is being released. That way, you can decide whether to trade around it or stay out completely. So for Europe, most major data is released between 8 a.m. and 1 p.m., which aligns well with the London session. The United States data, which often has the biggest market impact, comes between 1:30 p.m. and 5 p.m. Nigerian time, and that is right inside the London-New York overlap. And some of the most impactful reports include interest rate decisions, inflation figures, GDP numbers, the US non-farm payrolls, and more. Trading during news events can be profitable, but also very risky. Price can spike in both directions, and you may experience slippage. So whether you choose to trade or step aside, make sure it is a planned decision and not an emotional one. Now let's talk about the times you should avoid trading altogether. And the first is Friday afternoons. By this point, most institutional traders are done for the week. Liquidity dries up, spread widens, and price movements become less reliable. A trend that looked strong in the morning could suddenly reverse in the afternoon for no clear reason. If you must trade during this time, make sure to keep your positions small and your stop loss tight. Another time to avoid is during major holidays. The market may be open, but without enough participants, price action becomes erratic and unpredictable. It is better to wait until normal activities resume. Also, unless you are trading Asian currency pairs, it is usually not worth staying up for the Asian session. Between midnight and 5 a.m. Nigerian time, the market is often very quiet, with little momentum and wider spreads. Finally, the worst time to trade is when you are not mentally in the right space. If you are tired, distracted, stressed, or angry, please stay away from the screen. Trading is not just about charts and analysis, it is also about discipline, patience, and mental clarity. The market will always be there, but your capital will not if you trade recklessly. So in summary, the forex market may run around the clock, but only certain windows are worth your time. For Nigerian traders, the most productive periods are the London session, the New York session, and especially the overlap between these two. If your schedule allows it and you focus on Asian peers, then the Sydney-Tokyo session can also be useful. But knowing when to trade is only part of the equation. You also need to choose a trading style that fits each session, match your routine to the market, and prepare for high impact news. So whether you are trading full-time or part-time, the goal is to build a routine that works for your life and stick to it with discipline. If you found this video helpful, kindly give it a like and subscribe to the channel and share it with someone else who trades. Thank you for watching, and I will see you in the next video.